Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. At odds, European allies remain skeptical President Trump's deal with Iran will lead to the reopening of the Strait of Hormuz by Friday. Under pressure, the deal is also seen straining Trump's relationship with Benjamin Netanyahu, with Israeli officials voicing strong opposition to his agreement with Iran. And the Bank of Japan raises its benchmark interest rate to its highest in 31 years, while signaling further policy normalization lies ahead. We are live outside of the BOJ with the details. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Well, some big numbers out of Asia today, but let's turn to a quick markets check before we dig into those. U.S. futures trading sideways this morning. Perhaps investors are pausing this relief rally that was led by the MOU that was announced over the weekend between Iran and the United States. Investors still waiting to see what that actually entails and whether the reopening of the Strait of Hormuz will actually happen by Friday. Now, this follows some very strong gains in the S&P 500 yesterday, 1.7% higher, NASDAQ 3% higher. So we still await what happens in U.S. equities later today. Asian equities not doing as well as yesterday, 0.3 higher this morning. Japan, some big news out of the Bank of Japan, and also some China numbers, but we've got Winnie to talk to us through those later on. Oil prices not dipping as much as yesterday when we saw the biggest dip in about 2 weeks. We're seeing oil prices, Brent prices, 0.2 lower at $83 a barrel. And the yield on the 10-year notes unchanged this morning. We saw some movement on the downside yesterday, but we still await Kevin Warsh's first Fed meeting tomorrow and what the Federal Reserve is expected to do. But let's dig into some of the details that are happening across Asia. We've got Winnie Su in Hong Kong for us. Winnie?
Good morning, Abir. As you mentioned, lots going on in Asia today, and now we start with the China eco data. Pretty set of disappointing numbers for the China's May eco data. Specifically, we're looking at the retail sales number and fixed asset investment. Now, retail sales down about 0.6% year over year for May, and that is the first contraction that I saw since the COVID times, and also coming below estimate of a 0.2% decrease. Now, it really goes to show how domestic demand remains very weak in China, and that China's growth still pretty much rely on the growth when it comes to trade and exports. And in terms of market reaction, we are seeing pretty muted reaction because at this point, still investors not expecting much of a policy boost from the government. Now, flip aboard, we take a look at Japanese assets because, yes, we had the Bank of Japan coming as expected, raising rates by 25 basis points to the benchmark rate at 1%, the highest level since 1995, with one descent. But also we have the Bank of Japan saying that they are going to continue the monthly bond purchase from April 2027. Now, in terms of market reaction, we are seeing, in fact, some of the stocks, especially in the Nikkei 225, turning into the green, and that Japanese yen, in fact, also reversing some of the earlier gains. But the focus really will be on the presser later today.
All right, we'll have to wait and see what that presser holds for us. Winnie Su in Hong Kong. Now let's turn back to the regional story. President Trump and Vice President J.D. Vance have signed an electronic copy of the MOU with Iran. A U.S. official and the VP told Fox News the president will release the text of the deal on Friday. But that deal has come at one significant cost: the president's relationship with Israel's Benjamin Netanyahu. The Israeli leader's close relationship with Trump has become a political liability now that the U.S. has reached a deal that much of Israel opposes. European allies are also skeptical about Trump's promise the Strait of Hormuz will reopen by Friday.
The strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found. But it's essentially ships are starting to go out now. On Friday, it'll be completely opened. This is a very powerful document, and I want it to be released so probably pretty soon. I would say sometime after Friday. because the strait opens completely. It's open now, but it opens completely. We'll have all the mines knocked out for the most part.
Let's go to Jerusalem now and bring in Bloomberg's Dan Williams. And joining us from Singapore is Bloomberg's Stephen Stupczynski, who leads our Asia energy coverage. Dan, I want to start with you. I was reading your big take earlier today, and there's a quote there that says that President Trump had stabbed Benjamin Netanyahu in the back. Is that sort of the narrative that is floating around in Israel with this deal looming?
It's a narrative being stated loudly in Israel, in some quarters of Israel, but those quarters include the Netanyahu camp, a camp that until very recently had also been Israel's Trump camp. There's a sense in Israel that while this deal is being held up by President Trump as a victory, it's being held up by Iran as a victory, it comes down to a loss for Israel, which is not insignificant given that Israel went to war in partnership with the United States on February 28th against Iran. They had an equal share of the sorties over Iran, an equal share of the risk to service members. And obviously, Israel was hit far harder than the United States when it came to missile attacks from Iran. And now it seems that the Israelis feel excluded from those negotiations. There were times when Netanyahu, or at least his aides, were awaiting word of what Trump planned through his leaks to the media, rather, it appears, than through direct briefings between the president and the prime minister. They worry that this deal will effectively sell short the core aims declared by the allies at the outset of the war, and they feel they will have to pick up the pieces and perhaps go to war again alone sometime in the future.
And Stephen, when it comes to oil, we spoke about this yesterday and throughout this war, really, but it's a big concession. The reopening of the Strait of Hormuz is the ultimate concession in this MOU, really. How realistic is it that it would reopen by Friday? And how realistic is it to go by President Trump's timeline that shipments are going to move quickly or immediately through the waterway?
Friday is pretty ambitious. I think the key thing that the market is going to be watching for is if just some ships start to go through with their AIS, the ship tracking transponder on when they go through. Because we've seen a lot of oil ships go through dark. Literally, they'll turn their lights off and go through at the dead of night to go through undetected. And we've seen a lot of ships going through like that because they wanted to avoid any view from Iran. But if we do start to see an uptick in vessels from Friday going through very openly, then that does indicate that there is a level of opening. Now, Trump saying that we will see a full opening, whether you'll see a return to pre-war levels, that will obviously take more time. And according to the analysts and traders that we've spoken to, it's not a matter of days and weeks, it's more a matter of months. And there are a few reasons for that. One, you have to make sure that it is actually safe to go through and that everything has been agreed. The ship owners are okay with the safety in the area. The insurance firms have signed off on everything. And as well, which is quite interesting, it even goes down to the crews. Captains will not go through the strait if the crews do not feel safe. And then the other issue is the ships are all around the world. There are a lot of ships that got kind of stuck out of Hormuz in the Persian Gulf over 3 months ago, and they were subleased by ADNOC, Qatar Energy, Saudi Aramco to other parts. So getting those ships back to the region will take time as well, further adding to the timeline it takes to get back to at least some level of normalcy.
Dan, returning to Israel and Israel's military actions in Lebanon, that has proven to be a red line for Iran. What can you tell us about Israel's current military actions, the security zones in southern Lebanon, and whether Israel will continue to hold those?
Well, the sides are at least rhetorically at loggerheads over that. On this point, it would appear that the allies have closed ranks. We have a White House official saying yesterday that as part of this deal, Israel is not expected to withdraw from southern Lebanon, where it's set up a buffer zone some 10 kilometers in depth leading to the displacement of hundreds of thousands of Lebanese, but also leading, Israel says, to the uprooting of Hezbollah there. Hezbollah had really posed a menace to northern Israel in southern Lebanon for many years prior. So the Israelis are also saying they won't budge. It could be that during the 60-day negotiation period that would follow the signing of this MOU, the Americans will try to get the Israelis to quietly redeploy troops there, perhaps as some kind of deal with the Lebanese government, which is US-backed and is pledged, at least on paper, to crack down internally on Hezbollah. Time will tell whether that will satisfy the Israelis. And of course, the wild card is the friction point of violence, of lethal violence, which could really set off chain of events that can't be predicted by anyone.
Yeah, plenty to watch over the next week or so, certainly leading into Friday. Bloomberg's Dan Williams in Jerusalem, and in Singapore, Bloomberg's Stephen Stipczynski. Thank you. Now let's speak with Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Dalia, thank you for joining us this morning. Look, you've heard the conversation I was having with my colleagues just now. What do you really make of this MOU? What do you make of this deal? And most importantly, a question that I think is looming across a lot of people's minds: can we see a return to hostilities? Is this a certain thing?
So this is it's a significant moment. Having said that, it's only the beginning. It's only the beginning of half a process. We know that the signing of this MOU that happened yesterday and the physical one that'll happen on Friday is the beginning of a series of negotiations where, for example, this morning, Vice President Vance said that still the foreign minister and the speaker of the Iranian parliament would be part of future negotiations. Now, the sticking points, of course, are the reopening of the strait. What is the ceasefire? Where are the territories that are included in the ceasefire? Will Lebanon be included in it? The nuclear program and its future. But critical for Iran is the future of those frozen funds. And what kind of lifting of sanctions will it be? Will it be kind of second level lifting of sanctions like they were under the JCPOA? Or are they going to be what President Trump has promised, which is the first level lifting of sanctions, which would mean the re-engagement and building of American businesses inside of Iran? So all of this has yet to be ironed out. And we're also coming at this where the president and the U.S. administration has said in the past couple of months 38 times that a peace agreement is imminent or close. And so we're hedging our bets here, but still, based on past behavior, it's not clear that we're moving towards a real ceasefire.
So, Dalia, come Friday, the MOU is released. We actually heard reports this morning that it could be released even before Friday by President Trump himself. Do you think that it will leave room for interpretation? That is something we've been hearing from a lot of analysts, that it will have those concessions, but it will be open to interpretations, just like what we've been seeing from the Iranian side and the U.S. side on some of the concessions that you've just mentioned, the blocked assets, the oil sanctions. What do you think we're going to see out of that paper, that document?
Well, what we're probably not going to see is what we used to refer to as those 14 points. What we're going to see is kind of a list, probably a list of issues that are up for discussion with a level of kind of very not too detailed analysis. But President Trump has also rephrased this as different than past agreements because he believes it's a way to reshape the Middle East. The past, for example, JCPOA was not agreed to by Israel, the UAE, and Saudi Arabia, where this agreement is seen as something that Qatar, Pakistan, Oman, Turkey, even Egypt and Saudi Arabia have a vested interest. And at least that's how President Trump is framing it. And that this could be a kind of future peace agreement or strategic alliance between many parts of the region. Yeah. And so, again, a lot has yet to be seen, but we know that it's not going to be the so-called detailed 14 points that we've been talking about for the past couple of months.
And look, we just spoke with Dan about how that leaves Israel and Prime Minister Netanyahu, the tensions in that relationship between him and President Trump. What is your assessment of that? What do you think the political standing of Netanyahu is right now after this deal was announced?
So remember, he's up for re-election, and the hawks and those who are running against him are saying that he, just a week ago, up until a week ago, that he's just following whatever Trump is doing, and Trump is really dictating Israeli foreign policy and not Israel under Netanyahu. Now, the kind of reservation and hesitation that you're seeing from Israel because of this agreement is really over Lebanon. And the reason is that Iran has seen Lebanon as a kind of strategic front for it, and Israel sees it as kind of the beginning of Iran in terms of interest. And if we recall what happened in 2006 between Hezbollah, for example, and Israel, where Hezbollah kind of allegedly won the war and Israel was not able to then go into Iran, the strategic interest of Lebanon, but especially that southern area, is really important for Iran, but also very important for Israel. And so for this agreement, if it's going to include a ceasefire that includes Lebanon, then the Netanyahu is going to be seen as really weak internally by his own government and those who don't want to see him holding office again. So he's struggling both externally with the regional interests, but also internally for his own re-election.
So, Dalia, come the end of the 60-day period, let's assume everything goes according to plan, what would be considered a strategic win for Washington, and what would be considered a realistic strategic win for Tehran?
A realistic strategic win for this administration, for Washington, would be not just a reopening of the strait, but a peace agreement that's signed and detailed that is seen as stronger than the JCPOA, because President Trump really cares about appearing as stronger in the Middle East than President Obama was. And so that's going to be how the success or the win is measured. However, we know that to get to the JCPOA, it took months, if not years, of building trust. The negotiations happened for quite a while, and we don't actually have that level of trust between the negotiating partners. It hasn't been established. And so internally in the United States, what is going to be seen as a win? For Trump, he just might declare it as a win. But in terms of a prolonged, sustained win, where the U.S. is not drawn into further conflict, where we don't see, as we did a few months ago, the 14 body bags of U.S. Soldiers and the injuries and the increasing cost and the increase in cost of oil here in the United States, the way the president measures a win and the way the Americans measure a win are very different. Again, here in the United States, we are also facing midterm elections in the fall, and this is primary on the interest of the American public.
Yeah. Well, Dalia, always a pleasure to speak with you. Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Now, still ahead, we will discuss the outlook for global risk assets. That conversation is up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Asian stocks waver as investors gauge whether the U.S.-Iran peace deal can really sustain the relief rally. Attention now shifts to Australia, where the RBA's rate decision is due within the hour. Joining us now is Bank of Singapore's Head of Managed Solution Advisory in Dubai, Mehvish Ayub. Mehvish, thank you for being on set with us. Look, I want to start with the geopolitics. Good news, bad news, or wait and see?
So I think it's a bit of all of that. I think the key thing is that both parties have prioritized reopening the Straits of Hormuz. And this was really sort of the key it was causing a lot of economic pain across the globe. So I'm glad to see that that hopefully will be open on Friday. I think, you know, in the more medium to longer term, I think the details of the Memorandum of Understanding have yet to be released. We've got to see what does that imply for Israel. Will they comply? If they don't comply, what will Iran's reaction be? But I think essentially what they've done is tabled the longer-term issues around nuclear and around sanctions over this 60-day period, which I think, by the way, will be continuously rolled, because historically we've seen these type of agreements can take months, if not years. But in the shorter term, the absolute critical point about the Straits of Hormuz reopening, I think, is good news.
So I asked this question in a geopolitical capacity earlier, but I want to ask it on a risk asset capacity now. Come Friday, the Strait of Hormuz is open. What does that mean for risk assets?
So if we look at the reaction so far, I mean, oil is substantially lower and equity markets have already rallied. Now, if we take the week prior, where there was a little bit of volatility in anticipation of this deal, actually equity markets have been very resilient. And I think they've been pretty much pricing in an end to the war already. So I don't think Friday is going to cause so much of a reaction. I think we just have to be a little bit more wary as to the rally that we've seen and how to protect some of those gains. I think it's all going to be about fundamentals and earnings going forward for equity markets.
So turning to the other big story, I feel like we juggle between geopolitics and AI and the AI rally on this show. But when it comes to President Trump's next conquest, or something else that he's going to turn his eyes on once the Iran deal is under wrap, what do you think that is going to be, especially with everything that is happening with artificial intelligence? We've seen the Trump administration block or bar foreign access to Anthropic products, including Mythos. Do you think that that is the next goal for President Trump?
Yeah, I think you've hit the nail on the head. I think the real issue here is, markets always need to look at what is President Trump's focus next. And I think what's been flying a little bit under the radar is what was announced on Friday, is this export directive, exactly as you mentioned, about Anthropic's latest AI models not being essentially being restricted to US nationals. So hopefully this, gets agreed on in the shorter term. But if this is a sticking point in the medium to longer term, the reason why this matters is because there is an assumption that these models will be available to the global marketplace. And a lot of the investment and the capex concerns already that exist in the market is based on this assumption. So if you take this assumption away and you narrow the market, you've got a question about all of those huge investments that we've seen announced by the AI companies. I also think if we look at the equity market rally, it's been very narrow. It has been all around AI, and I do believe that is a secular theme that will continue to run. But I just think investors need to be really wary of the overall exposure they have to AI in their portfolios and how to manage that.
So, Mehvish, the last year or so was dominated by geopolitics and tariffs. If we consider Venezuela, it's not just Iran, the U.S., but that's close to memory. What is the next 6 to 12 months going to carry for us in terms of macro risks?
So I think it will be a continuation. I think foreign policy under the current US administration is going to continue to cause bouts of volatility. I do think, though, if the fundamentals are there, earnings are there, equity markets should be relatively resilient. But again, you just need to ensure that you have diversification in your portfolios. You're not overexposed to a particular country or sector in terms of your equity, and you still have actually diversification across asset classes. So I think you just need to manage for more of the same, but obviously the headline news will be slightly different based on what President Trump is looking at going forward.
And just briefly, we have a lot of central bank decisions looming. We just had the BOJ, the Fed is tomorrow. We're still expecting the RBA. What is your take on monetary policy going forward this year?
So I think there has been more divergence in policy, and that's given the state of play and the inflationary pressures, which were not consistent across countries. So we can see that the Bank of England and the ECB looking to hike rates, and we have a view actually the Fed will stay put. Now, we did have a rate cut priced in for year end, but I think that's all been priced out of market. So I think managing that sort of divergent in central bank policy making, and actually that then has a knock-on impact on currency. So just accounting for that in your portfolio will be important.
All right. right. Well, a lot to watch out for this week and certainly over the next 6 months. Mehvish, thank you so much for your time today. As Mehvish Ayub, Head of Managed Solutions Advisory Dubai at the Bank of Singapore. Now, before we head into the break, let's take a quick look at markets. S&P futures still trading sideways, Nasdaq a little bit down, and Dow Jones also sideways. Euro Stoxx 50 futures also sideways this morning. Brent prices dipping slightly. Now, coming up, we will discuss the resumption of energy flows through the Strait of Hormuz with Paul Gooden from 91. That is coming up next. This is Bloomberg. This is Horizon's Middle East and Africa, our top stories this morning. At odds, European allies remain skeptical that President Trump's deal with Iran will lead to the reopening of the Strait of Hormuz by Friday. Under pressure, the deal is also seen straining Trump's relationship with Benjamin Netanyahu, with Israeli officials voicing strong opposition to his agreement with Iran. And the Bank of Japan raises its benchmark interest rate to its highest in 31 years, while signaling further policy normalization lies ahead. We are live outside of the BOJ with the details next. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Now, before we head into our usual markets check, let's take a look at the Reserve Bank of Australia. It was expected to keep rates on hold, and that was generally what happened. What they say is monetary policy is well placed to respond to developments, that today's policy decision was unanimous, and that signs of consumer spending is slowing. What the RBA is saying is that it leaves cash rate target at 4.35%. The estimate was 4.35%. So rates pretty much on hold there. Further, again, we were expecting that from the RBA because of that softening in economic growth prospects. Now, let's move on to a quick markets check before we hear more about the BOJ and the decision there. S&P futures still trading sideways, about 0.1% lower. MSCI Asia Pacific 0.2 higher this morning. We've got some data coming out of Asia this morning from China, the Bank of Japan, and Brent crude prices dipping below $83 a barrel, 0.3% lower. The yield on the 10-year notes not doing much. We saw some movement yesterday upon the announcement of this MOU between Iran and the United States. But today the market is pausing that rally that we saw across risk assets, and we await Kevin Warsh's first Federal Reserve meeting happening tomorrow on Wednesday. So we'll keep an eye on the details that emerge out of that meeting. Now, the Bank of Japan has raised its benchmark interest rate by 0.25 percentage point to 1%, its highest level since 1995. It also signaled that further policy normalization lies ahead. We have the co-anchor of Asia Trade, Sherry Ann, in Tokyo. Sherry Ann, thank you for joining. Look, this hike was widely expected. It is within estimates, wasn't it?
Abir, yes. So we were expecting to see that 25 basis point hike to 1%, the highest, as you mentioned, since 1995. That's what we got, according to economists. Of course, that was the expectation. The BOJ now citing reduced risk when it comes to significant slowdown to the Japanese economy. Still, the future pace of rate hikes, they say, will depend on the impact from the Middle East, not to mention the broader economic outlook. The fact that we got a peace deal between the U.S. and Iran will further be considered, of course, given that Japan has imported more than 90% of its crude from the Middle East before the conflict, especially through the Strait of Hormuz. So we'll continue to watch the repercussions or implications for the Japanese economy. There was only one dissent in this vote, and it came from a reflationist board member, Asada, who talked about the downside risks being larger to the Japanese economic outlook, to the labor market, instead of inflation. We are going to get the latest inflation numbers later this week. Another change that we saw in today's policy was an update when it comes to JGB purchases. They will stop reducing those purchases from next year. They're now targeting 2 trillion yen of bond purchases monthly from April of 2027. Of course, despite the fact that they're stopping and halting this reduction, the fact remains that the balance sheet from the Bank of Japan will continue to shrink, given the redemption still exceed the new buying from the BOJ. We have seen, of course, the volatility in the JGB space, which is why last year they had already cut by half the reduction of these JGB purchases. The 10-year yield, for example, last month touched the highest level since 1996. We continue to see the upside when it comes to yields here in Japan. Not a lot of movement when it comes to the Japanese yen, which is telling, of course, because we got the peace deal as well. We got a rate hike, but the downside pressure, especially with those yen shorts at a 9-year high, is really, really big at the moment. What will be crucial, Abir, will be to watch the press conference by the Deputy Governor Uchida later today, because Governor Ueda has been hospitalized.
All right. Bloomberg, the Asia trade co-anchor Sherry Ann with those details from the BOJ. Now, oil is steady after the biggest drop in more than 2 weeks. That's as traders, shippers, and producers wait for details of a U.S.-Iran deal that's intended to pave the way for the full reopening of the Strait of Hormuz. President Trump has insisted that the strait would be clear on Friday, but our next guest says it will take several months for flows to normalize. So joining us now is Paul Gooden, head of natural resources at 91. Paul, good to have you on. Walk us through this. It will take months, even if the Strait of Hormuz is open on Friday?
Good morning, Abir. So look, on Friday, the Strait of Hormuz will open, and at that point, there's about 100 million barrels of oil and about 20,000 seafarers that have been kind of stranded north of Hormuz for over 3 months. So, fairly quickly, you're going to see those seafarers and those barrels kind of exit the Strait of Hormuz. But something that we really need to keep our eye on is how quickly vessels are re-entering Hormuz, because in order to restart the 11-12 million barrels a day of production that's offline, you need to drain local storage, and then you can restart the wells. And so, look, my best guess is after 2 months, you can probably get back about 80% of the production, but I think that final 10 to 20% will take, 3, 4, maybe even 5 months. And, more broadly, I think we need to recognize the oil market is going to be living with a hangover for several years because of the war. And there are really 2 reasons for that. The first one is that global inventories have drawn about 1 billion barrels. And over the next few years, governments will want to refill those inventories. And so that means higher demand. And then the second reason is we can't unlearn what we've learned. And what we've learned is that Iran can and will close the Strait of Hormuz. So there will be some kind of geopolitical premium in the oil price as a result of what we've seen.
Yeah, and that was going to be my next question. You mentioned this hangover effect. Do you think the world has recalibrated how it looks at the Strait of Hormuz, its strategic importance, given that those geopolitical tensions have proven that they could flare up at any time, and that Iran has proven as well that it could just lock it all down?
Yeah, look, I think that's exactly right. You'll see some kind of remedial action taken. So some producers in the region will build new pipelines to try and circumnavigate Hormuz. But look, I think that, most folks will be kind of thinking to themselves, whatever the mid-cycle price they were using before the war, that'll be going up by $5 to $10. And again, 2 reasons for that. One is you're going to have probably a doubling in the apparent oil demand growth for oil for the next 2 or 3 years as inventories are rebuilt. And then this geopolitical premium, because you still got 20% of the world's oil supply north of Hormuz and all of the spare capacity in the system. So yes, I think we're looking at a hangover, and I think we're looking at kind of structurally higher oil prices for the next 2 or 3 years because of this.
So you mentioned higher oil prices. I was looking at a note from Morgan Stanley earlier, and they've pared down their expectations for how oil prices are going to average towards the third quarter and the fourth quarter. Again, theoretically, given the Strait of Hormuz does open, it takes a few months for those shipments to make their way through the Strait of Hormuz. What are your expectations for how oil prices would average over the next 6-12 months?
Yeah, so look, over the sort of the coming weeks and months, the answer is it's going to be very volatile. There's lots of things that are still undecided and have to be negotiated. So there's always the potential for some kind of kinetic action or some kind of speed bump in the negotiation. So I would kind of say the next few weeks and months, volatile. My view kind of at the start of the year was that mid-cycle Brent oil prices were about $70 a barrel. That's kind of what you needed to kind of balance and supply and demand. My best guess now is that we're probably looking at around $80 a barrel. And look, it's not just the impact of the war and the inventory rebuild that we need to see and the geopolitics. It's also because of what's happening in the US. So in the US, US shale has been the predominant sort of supplier of the incremental barrel over the last decade. But the message from Texas is that the big US E&P companies are running into sort of tougher geology. They've drilled the tier 1 wells, they're now drilling the tier 2 wells. And so that means that US production is not going to grow that much, even with these higher oil prices. So look, the good news is there'll be extra production from the UAE, from Venezuela, and from Argentina. But yeah, my sense is probably $80 a barrel over the next 2 or 3 years is probably the mid-cycle price.
And Paul, what about an economic slowdown? Do you factor that in for what it means for prices, but also supply and demand over the next year or so?
Yeah, look, it's a great question, and most people kind of think that oil prices of 100, 150 are good news for the oil companies, and the reality is that it's not, because it does create demand destruction, and if the oil price gets up to, let's say, $150, it gets to about 5% of global GDP, and that is the point at which the oil market's going to tip us into a global recession. So yes, really high oil prices create a one-off windfall for oil companies, but it does create this longer-term problem in terms of demand destruction. And look, the good news of a reopening of the Strait of Hormuz is that it moderates the oil price. The long bond yield is coming down, risk of recession goes down, and that creates this sort of healthier long-term demand scenario for oil.
Right. Well, we await key details on Friday then. That was Paul Gooden, head of natural resources at 91. Now, coming up, the Iran war is forcing Gulf states to reassess their their security priorities and long-term strategic partnerships. We'll discuss that with Mehran Kamrava from Georgetown University, Qatar next. This is Bloomberg. The US-Iran MOU may offer GCC countries some relief after months of conflict, but it has also exposed vulnerabilities that many in the region can no longer ignore. Iran's attacks on Gulf countries have raised fresh questions about the reliability of U.S. security guarantees, prompting governments to rethink how they protect themselves and diversify strategic partnerships. Joining us now is Mehran Kamrava, Professor of Government at Georgetown University in Qatar. Mehran, thank you for joining us this morning. Look, I want to focus on the Gulf perspective in all of this. We've discussed the MOU, what it might entail, the reopening of the Strait of Hormuz, but then a big part of this whole war equation has been GCC countries that are massive allies of the United States. How do you think they view this MOU, and how do you think they coexist with Iran in the region, bearing in mind the geographies of the region?
I think it's important to remember that the Gulf Cooperation Council doesn't always speak with one voice. In fact, through this process, we've now learned that Qatar was intimately involved in the drafting of the MOU, or at least in helping the two sides come up with the outline of an agreement, whereas the UAE and to a lesser extent Saudi Arabia were more reluctant to see Iran emerge in the shape that it has, with strategic chokehold over the Strait of Hormuz and having emerged stronger in the Persian Gulf. But overall, I think everyone in one form or another welcomes the cessation of hostilities. As you know, the Strait of Hormuz is a very critical choke point. The Persian Gulf is a gulf. It's not an open ocean, and these all the different players have to learn to live with one another. So I think in one form or another, everyone welcomes the cessation of hostilities, but I think the outcome is yet to be determined, the ultimate outcome.
So you mentioned the diverging perspectives of Gulf countries and how they've handled this differently. Going forward, what does this war mean for the security architecture of the GCC countries?
You know, that's a million-dollar question. Everyone is trying to guess that. I think there are really two options. One is to double down on the American security umbrella and for the Gulf states to entrench themselves more firmly within or under the American security umbrella. But the more likely outcome is a diversification of security partnerships, strategic partnerships of the kind we've seen, for example, between Saudi Arabia and Pakistan. And of course, there's also the development of domestic arms infrastructure, the way we have seen between UAE and South Korea, or Qatar and Turkey. So I think what we're likely to see moving forward is more actors being involved in security partnership and strategic alliances, actors like Pakistan, South Korea, and others, Turkey and others.
So when it comes to Gulf leaders and how they're thinking about these things, what do you think is the biggest geopolitical risk they're underestimating? Would it be Iran going forward, or is it possibly Israel?
Well, I think everyone is worried about the Israeli wild card because on two previous occasions, Iran and the United States were on the cusp of an agreement in June of 2025 and then again in February of 2026. And the Israelis attacked. Second time, of course, it was the United States that also initiated the attack. And we all know that out of this entire MOU and the upcoming peace agreement, Netanyahu has come out the biggest loser. And so everyone, I think, is worried about the unpredictability of Israel. And of course, there's also a keen awareness across the region that Iran now has discovered a very inexpensive but strategically effective leverage, and that is the Strait of Hormuz.
All right. Well, Mehran Kamrava, Professor of Government at Georgetown University in Qatar, thank you for your time. Now, coming up, the United States is at odds with allies over how easy it will be to reopen the Strait of Hormuz. We report live from France for the G7 next. This is Bloomberg. U.S. President Donald Trump has repeated that the Strait of Hormuz will reopen on Friday. But on the sidelines of the G7 summit, it's clear his European allies do not share his optimism. For more, Oliver Crook, our Europe correspondent, joins us from Evian in France. Ollie, I'm only slightly jealous of your background, but I want to know more about those concerns that the allies have.
Yeah, absolutely. So you have the G7 leaders who have assembled here in Evian, France. They were greeted by the host, Emmanuel Macron, last night, including Donald Trump. And the two of them held a sort of short bilateral meeting. And then the press sort of came in. And really, you got the sense there that Donald Trump was explaining the deal to a great deal to the G7, but also to the rest of the world, but also trying to really sell this deal to the rest of the world and the G7. And as you've just been mentioning, I think very publicly, there's been a very large sigh of relief among the G7. Obviously, it takes some of the pressure off the oil market, the inflation story here in Europe, but it still has a million questions associated with what exactly is in this plan, how the Europeans should be sort of complying and helping with it, and what the future looks like going forward. There's this question about if the Europeans will join in, particularly on the military effort to clear mines from the Strait of Hormuz. Not even clear if there are mines, how many mines there are within the strait itself, and of course a big question about financial sanctions going forward. The Europeans have their own financial sanctions, and there's a real doubt here among European leaders that A, the strait will be open by this Friday, and that B, necessarily we have an understanding of when it will be open, and the question of whether or not there will be tolls. We have the Iranians saying that the toll-free period will only be 60 days. So these are going to be a lot of the questions, and I think that for many of the diplomats and the leaders here that we've been talking to on the sidelines, there's a real question as to whether or not there's going to actually be a final communique that is really very robust, because there's a lot of difficulty trying to find the common language on this question of Iran with all of these questions still left open.
And Ukraine is also on the agenda. What's the path forward there?
Yeah, absolutely. So listen, today is going to be all about geopolitics. We have Zelensky arriving this morning at 9 a.m. The session is going to be on Ukraine. Then we have the leaders of Qatar, Egypt, and of course the UAE, who will be joining the G7 in a little bit sort of around noon. And then later in the day, Brazil and Kenya will be joining. But I think for Zelensky, and this is really a critical moment for the war in Ukraine, for him it's the opportunity to engage with the President of the United States to try to establish what the next chapter of American involvement will be in the war in Ukraine. And we did hear from President Trump speaking about Ukraine post the sort of Iran. Have a listen to what he had to say yesterday.
Now that this is finished, we're going to be focusing on that, see if we can get that one done. 25,000 people a month are dying, mostly soldiers, and that shouldn't happen.
So it sounds as if for the President of the United States, who's really checked out of the war in Ukraine and the conversations and the negotiated peace between Russia and Ukraine, that this is something that he can really come back to the table with. For the Europeans, the task here is trying to get him on the Ukrainian side of the equation, and that is, of course, going to be the main sort of object for President Zelensky, who arrives here a little bit later today.
All right. Oliver Crook, our Europe correspondent in Evian, France. Now, Cape Verde held Spain to a surprising 0-0 draw in the country's World Cup debut. Cape Verde is the third smallest country in terms of population to qualify for the World Cup. Many expected them to be swept aside by tournament favors Spain in their opening Group H contest. Now, a quick look at where equities and other assets are before we head out towards the end of our show. S&P futures dipping slightly more than previously, 1/10 lower. Nasdaq and Dow Jones also dipping, as well as the Euro Stoxx 50 futures. Brent prices dipping slightly, not as much as yesterday, but we await and see what Friday holds. Now, that's it for Horizons Middle East and Africa. I'm Abir Abu Ahmad in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.